This conference will now be recorded.
So again, I'd like to thank everyone for taking the time this morning during their busy schedules to make this presentation. For those of you that's new to the RHA, you can follow us on Twitter. I've got the link up there. We also have our Facebook page. Also, we have the Roadway Live app, which is free to subscribe. So by all means, from your smartphones, you can download the app today and stay up to date with constant updates from the virus, road closures, and any new bits and pieces in legislation and videos that comes up. So as I've stated, I have muted all attendees that are currently in, which we have a total of 63 today. Okay, so no one should be able to hear anyone. However, what I have done is opened the chat box. So you should see a chat box icon on your screen. In there, throughout the presentation, I'll stop and pause for questions. Type away in there, and after the presentation, I will get back to you all individually with answers to your questions. No one should be able to see your questions you're asking, so don't worry about anyone else reading what you're asking. And there is no such thing as a silly question. So today's program then will be myself running through the spring industry updates, including the relaxation of drivers' hours, the postponement of IR35, the furlough scheme, which I'm getting a lot of questions about, and some changes to contracts of employment, and much more. So as I said at the start, my name is Darren Lomax, and I'm the Northern Area Manager based in County Durham. So for anyone that are up in this area, hello, it's good to see you. You will notice from my accent, I'm not originally from here, so don't let that put you off. So now I'm going to start the presentation, and as I've said, please bear in mind the chat box is there. Type away any questions, and I will get back to you as soon as I can. So the first topic I'd like to discuss with you today is the enforcement of the temporary relaxation of drivers' hours rules. In response to unprecedented pressures on local and national supply chains, the Department of Transport has included the temporary and urgent relaxation of enforcement of drivers' hours rules in England, Scotland and Wales. A specific review of the continuation of the relaxation past the 5th of April has been conducted, and a decision has been made to continue with the relaxation. In addition, due to the stakeholders' feedback, further relaxations have been included, allowing drivers to use the ferry and train derogation whilst taking reduced daily rest of 9 hours. The relaxation in hours will not reduce the level of enforcement of drivers' hours. It is vital that companies only use these relaxation rules when needed, and companies must monitor drivers to ensure they do not drive tired or in any way unfit. The need for compliance with this rule is absolute. The relaxation must be used wisely and not abused. The practical implementation of the temporary relaxation should be through agreement between the employers and the employees. The drivers in question must note on the back of the tachograph charts or printouts the reason why they are exceeding the normal daily limits. Now, for everyone here today, you will know that this is usual practice in emergencies, and of course essential for enforcement purposes. The temporary relaxation of the rules described here reflect the exceptional circumstances stemming from the COVID-19 outbreak. Now, one of the questions I get asked quite a lot is, who can use the relaxation? Well, anyone driving under EU rules for Great Britain in drivers' hours rules and undertaking carriage of dangerous goods by road can use the relaxation where necessary. The relaxations are not limited to a specific sector. So I'd like to bring your attention to point A that you can see on your screen, because I get a lot of feedback from this. It states quite clearly that a driving limit of 9 hours can be swapped for one of 11. And just to clarify a few points, that does mean a driver can drive for 11 hours a day, not just one day of the week. Okay, so you can drive for 11 hours for 5 days, and you still will have 5 hours remaining for a Saturday or a Sunday. Again, if you have any questions on drivers' hours, now's the time to put it in the comments box. I'm now going to be moving on to the self-employment status and IR35. Now, we have discussed self-employment status many times in these briefings, the traffic commissioners add in their own clarification. And we have seen a number of O licenses that have been cartelled to the number of PAYE drivers available. So just to clarify, We hear a lot of people saying, yeah, but we have self-employed drivers. Now, if these people are driving your vehicles on your own license, under your insurance, and under your instruction, primarily they're going to be classed as an employee, not a self-employed driver. So just to reiterate, a self-employed driver is someone who owns their own vehicle and has an operator's license. They hire themselves and their truck and provide an invoice for work carried out and are responsible for paying their own tax and national insurance. The government has postponed the controversial reforms for IR35 rules until 2021 in an attempt to ease pressure on businesses and individuals amid the fallout of COVID-19. The changes would have affected drivers working for agencies or claiming they were self-employed. A number of measures previously reported by the RHA Roadway Live app would have required both drivers and employers to prove that workers were genuinely self-employed through owning their own vehicle or having their own O licenses, or some of the key points such as previously mentioned. Failing to abide by the new ruling could have resulted in substantial penalties for both companies and individuals. Last month, the Treasury confirmed that it was to push ahead with the changes to the rules, which previously only applied to the public sector, but which could have had huge impacts for the logistics sector. Steve Barclay, the Chief Secretary for the Treasury, has confirmed that changes will now be postponed until the 6th of April 2021 in light of the coronavirus outbreak. However, he also went further to add that this was a deferral, not a cancellation, and the government still remains committed to reintroducing this policy. Okay, again, if you have any questions on self-employment or IR35, please use the comments box. Okay, I'm now going to be moving on to the furlough scheme. We've had lots and lots of questions about this. Please note that the situation in respect of COVID-19 is a fluid one, and one that both rapidly and constantly changing. The information based on the current guidance produced by the government from various announcements, such as information, may be subject to change and is valid as of the 15th of April. As you may be aware, there was a huge announcement or update yesterday evening. Under the current scheme announced by the Chancellor last month, employers can claim a grant covering 80% of the wages for furloughed employees, subject to a cap of $2,500 a month. To qualify and to protect against fraudulent claims, individuals originally had to be employed on February 28th. 2 seconds, read this individual. But following a review of the delivery system and to ensure the scheme helps as many people as possible, new guidance published yesterday has confirmed the eligible date has extended to March the 19th, the day before the scheme was announced. Employers can now claim for furloughed employees that were employed on their PAYE payroll on or before the 19th of March. This means that the employee must have been notified to HMRC through an RTI submission notifying payment in respect of the employee on or before the 19th of March. This change makes the scheme more generous whilst keeping a substantial fraud risk under control and is expected to benefit over 200,000 employees. HMRC have been working at pace to deliver the scheme, which is due to be fully operational next week. I have had an update today on some of the announcements. So the portal for this is due to go live on the 20th of April. The first payment to employees is expected to be on the 30th of April. They aim to make a payment 4 to 6 days within the submission of the claim. Now, to be able to claim, you need your PAYE reference number, the number of employees being furloughed, the claim period, i.e. the start date and end dates, and the amount claimed per the minimum length of furloughing of 3 consecutive weeks, your bank account number and sort code, your account name, and your phone number. HMRC will also reserve the right to retrospectively audit all aspects of your claim. So please make sure if you have any questions or you're unsure, get in contact, make a note, and I will get straight back to you. I'm just going to pause there for a second just to let anyone write some questions, because I know the furlough scheme has been a big subject for a lot of people. So by all means, fire out your questions to me. For those people that are still not eligible for furlough, it is strongly advised that you advise them to seek universal credits. There is a scheme available for those. So anyone who doesn't, please, by all means, push them towards universal credits. Okay, contracts of employment. Day one for any new staff isn't always plain sailing. Okay, it's not the easiest. We have inductions, health and safety briefings, introductions, all important parts of day one. Paperwork is another task to complete, and if all operators are honest, issuing everything on day one can be tricky to complete within the time constraints of running a busy operation. Contract of employment in particular can usually fall on the back burner, as employees currently have up to 2 months to issue a statement of written particulars of employment to employees who have been working for them more than a month. All of this has now changed. From the 6th of April, the right to contracts of employment for employees and workers will become mandatory for employers to issue on day one. What needs to be included within these terms has also been broadened. In addition to the current information that must be provided to all new starters on or after the 6th of April, the employment terms and conditions should also include the points listed here. Holiday pay. The 12-week reference period has been problematic. Fluctuations in pay can lead to higher holiday pay if leave is taken immediately following peaks, or lower holiday pay if taken following troughs. On the 6th of April, the reference period changed to 52 weeks. For the purpose of holiday pay, many firms begin their year on the 1st of January. If this is the case, you need to decide whether to change the way you calculate holiday pay on the 6th of April or at the start of your holiday year. Christmas brings high levels of overtime for some sectors, which could have repercussions on holiday pay if you switch to the new system in January. It could also mean that people who work for the same hours receive different holiday pay simply because of the dates they have taken leave. If your financial year ends after the 6th of April, the value of accrued but untaken holiday will increase, meaning you may wish to limit how much holiday can be carried forward. In some scenarios, the 52-week reference periods will need to be altered. Helpfully, however, employers do not need to look back more than 104 weeks prior to the holiday. Review your holiday pay policy. If you have not started to include variable pay in your holiday pay, now may be a good time to do so, given that the reference period was one of the few pieces of holiday pay case law that was unclear. If you decide to tackle this, it is important to assess what pay components you will cover and whether this triggers a claim for backdated holiday pay. Under the Parent Bereavement Pay and Leave Act 2018, primary carers, not just parents, will be entitled to time off work following the death of a child. This includes adopters, foster parents, and guardians, as well as more informal groups such as close relatives, family friends who have taken responsibility for the child's care in the absence of the parents. People's eligibility to receive the entitlement has widened beyond just parents, following feedback from a consultation that ran earlier this year. Parents or carers will be entitled to at least 2 weeks leave following the loss of a child under the age of 18 or a stillbirth after 24 weeks of pregnancy. Employees with 26 continuous weeks service will receive the paid leave at the statutory rate, and other staff will be entitled to unpaid leave. Leave can either be taken in one block or in 2 separate blocks of 1 week. It can be taken within a 56-week window of the child's death. This is for time to allow for things such as anniversaries or birthdays. Notice requirements will also be flexible, so leave can be taken without prior notice. Parents will also not need to provide the employer with a certificate a death certificate as evidence. I have put a link on the screen there for you if anyone wants to quickly write that down, or again, if you have a question or a message, I can send you the link following this presentation. Financial standing has been an issue the last 12 months, which is why I thought it was important to add this slide. The law requires an operator to be of the appropriate financial standing. The availability of finance is a continuing obligation throughout the lifetime of the operator's license, which will be specifically checked at the application stage, the 5-yearly renewal, the continuation of the operator's license, or if called to a public inquiry. Operators who fail to meet the financial standing requirements risk having their license revoked by the traffic commissioners, and unfortunately, we are seeing an increased number of operators who are failing to satisfy their financial standing requirements, or whom simply do not appreciate how financial standing is assessed. As a general rule, the evidence of financial standing must be in the name of the holder of or applicant of the operator's license and not held by any third party. Now, just a quick question for you all. I know it's difficult to answer because you're all muted, but again, utilize the chat box by all means. My first question to you would be, what is the requirements for financial standing for a standard operator's license? Okay, so for those of you that got it right, it's 8,000 per vehicle. What about the financial standing for a restricted license? How much should you keep back for each vehicle and supplement vehicle after that? You can see my chat box slowly going up, so people are answering, which is very good. Hopefully you got it all right. Okay, so anyone with a restricted license, those are your financial requirements. Typically, the evidence from the Traffic Commissioner that can take into account is set out in the Senior Traffic Commissioner's Statutory Document Number 2 of Finance, available on the gov.uk website. More recently, we have seen a move by the Traffic Commissioners not to accept the submission of certified annual accounts. They still want to check the cash reserves. Whilst we do not agree this is an appropriate approach, we do not believe the Traffic Commissioners have such discretion in these scenarios. However, operators need to be aware that this may be an approach the Traffic Commissioners take with you. Other traditional routes of showing financial standing also seem to be failing from acceptability by the Traffic Commissioners. Historically, some operators would seek to demonstrate financial standing by the way of availability of a working capital loan facility. This appears again in the Senior Traffic Commissioner Statutory Document Number 2 for Finance as an appropriate method of showing financial standing. But over the past 12 months, the Traffic Commissioners have required operators to draw down on the funds to show the loan to prove that the funds are truly available. Another traditional method of demonstrating financial standing was for the use of an unused credit cards in the operator's name. However, if the vast majority of sums required for financial standing is being demonstrated by the referencing to the credit card availability, the Traffic Commissioners are tending to refuse to accept this as evidence on the basis that the credit card APR are often high and an expensive way of borrowing. The Traffic Commissioners therefore question whether such funds are truly available, as they are unlikely to ever be used. Okay, so let's talk about FORS for a little bit. The Fleet Operation Recognition Scheme was introduced to raise standards to the highest level of best practice in safety within fleet operations. However, the scheme has proven to be not fit for purpose by operators and Traffic Commissioners. It has become a monopoly, operating in the interests of the body running it, rather than the interests of regulation and road safety. FORS standards and audits are not aligned with the operators' licensing around safety, operational best practice, and compliance. We believe that the compulsory membership of FORS for those businesses in London is unacceptable. The RHA, along with the Traffic Commissioners and the other trade bodies, have lobbied successfully at the highest level for reform. However, the timescale offer for this was unacceptable, being around 2 years, resulting in the RHA threatening legal action against TfL. The industry's main trade associations have accused TfL for flouting competition law, with the RHA threatening legal action against it for abusing its monopoly over the supply of Falls accreditation power. The RHA have suggested that TfL's contracting out of Falls to AECOM, which led to the introduction of membership fees, prevents it from backing other schemes because it damages its own commercial interests. They believe Falls Immersions, as the only widely recognised scheme within construction and other business sectors, has resulted in it monopolising the safety accreditation space. Of course, AECOM have denied Falls from operating a monopoly, saying other accreditation schemes are still available. Now that concludes the presentation I have for you today. Just a quick bite of everything that's happening. I am going to leave the presentation open for everybody. For anyone who has any questions, any feedback, by all means, please put it in the comments box. It was great to see the levels today. I had 88 people logged on today, which has been very, very successful. I'd also like just to remind you of the next briefing, which will be on Tuesday, the 21st of April, which will be the undertakings of the transport managers. Again, this is also going to include updates from the COVID-19, more information on driver's hours, driver's medicals, servicing MOTs, and possibly how to look after your operator license as well. So again, I'd just like to thank you all for taking the time this morning. I hope you got something from it. I can see my call log slowly climbing. So again, any questions, anything you need, by all means, please send me a message and I will get back to you later on this afternoon. Thank you very much.